Have you ever stood inside a Walmart and just looked around and wondered what makes this absolute beast of a company actually work? I mean, it's so much more than just everyday low prices. Today, we're going to peel back the layers on this retail giant. We're going to deconstruct the entire thing, its strategy, its financial engine, and what it all means if you're looking at it as a potential investment. So here's how we're going to tackle this. First up, we'll dig into Walmart's secret weapon, that powerful competitive moat that nobody seems to be able to cross. Then, we're going to get our hands dirty and look at the financials to really check the health of the company. After that, we'll look ahead and see what's fueling their future growth. And then we get to the tricky part, talking about the price tag on the stock. Finally, we'll wrap it all up and land on our final investment stance. Before we get into any of that, just take a second to look at this number. Over $1 trillion. To put that in perspective, that's bigger than the entire economy of most countries on the planet. We're not just talking about a big company here. This is a global economic force. And that mind-boggling scale, well, that's the key that unlocks everything else we're about to discuss. Okay, so how in the world did Walmart build this retail fortress? Well, it all comes down to something investors like to call an economic moat. These are the powerful, deep-rooted advantages that pretty much keep all the competition away. So let's start there. Let's break down what makes their moat so unshakable. The best way to think about Walmart's strategy is like this giant, unstoppable flywheel. It starts with their massive scale, right? That gives them insane buying power with suppliers, which leads to lower prices for you and me. Those low prices bring in more customers, which fuels more growth, which lets them build out this incredible network of stores. And now, that store network is also a super efficient delivery hub. And just to spin the flywheel even faster, they're layering on new, super profitable businesses like advertising and memberships. It all just feeds itself. And look, this isn't just about being the biggest kid on the playground. It's about the kind of power that comes with that size. I mean, when you're this much larger than your closest rivals, you get to set the terms. You can invest billions more into tech. You can weather economic storms that would sink smaller ships. It's not even the same sport. They're in a completely different weight class. Now, here's what's really wild to me. A company this gigantic is still, somehow, stealing more market share. And the really interesting part is who they're winning over. More affluent shoppers. See, it's not just about being the cheapest anymore. It's about being the most convenient. By pouring money into e-commerce and fast delivery, Walmart is now going toe-to-toe with Amazon on pure convenience. And that, my friends, is a total game changer for their brand. So, a strong moat is great and all, but it doesn't mean much if the castle is crumbling from the inside. So for our second section, let's pop the hood, let's really look at the numbers and see if the engine running this whole operation is as powerful as it seems on the outside. Okay, think about it like this. Reported profit is kind of like an opinion, but cash is a fact. And Walmart's bank account is absolutely flush with facts. For every single dollar of profit they report on paper, they are actually generating almost $2 in cold, hard cash. That right there is the sign of a remarkably healthy, high-quality business. And what's it been doing with all that cash? Well, for one, it's been paying down its debts. You can see it right here. Its debt has been shrinking and shrinking relative to the size of the company. That's kind of like getting a massive raise at work and using it to pay off all your credit cards. It's just a really smart, disciplined move that makes the entire business that much safer. Just to put this in perspective, imagine for every dollar you had to pay in interest on your mortgage or car payment this month, you had over $12 just sitting there ready to cover it. That's the kind of financial cushion Walmart has. It can literally pay its bills in its sleep, no matter what the economy decides to do. All right, we've established that Walmart is a financial fortress with an incredible moat. But hey, in the world of retail, if you're standing still, you're falling behind. So for a third section, let's look to the horizon. What's next for this giant? Where is the new growth going to come from? Now, this isn't just a list of random headlines. If you look closely, you can see a very clear strategy emerging. This is Walmart transforming itself from a boring old retailer into a full-blown tech company, partnering with OpenAI for AI shopping, buying Vizio to get into the TV advertising game, and pouring billions into robotic warehouses. It's all part of a plan to build the retail ecosystem of the future. And here's the really crucial part. This is fundamentally changing how Walmart actually makes money. See, it's not just about the tiny profit margin on a gallon of milk anymore. It's about selling high-profit ad space on its website. It's about locking in customers with Walmart Plus. It's about taking a cut from other sellers on its platform. These businesses are growing like weeds, and they are supercharging Walmart's bottom line. This right here, this is a huge deal. For years, the big question mark hanging over Walmart was, yeah, but can you ever actually make money selling stuff online and compete with Amazon? Well, we have our answer. Thanks to all that investment in automation, they've not only slashed delivery costs, but they've made their entire US e-commerce business profitable. They proved they can win in both the physical and the digital world. Okay, so far we've painted a pretty amazing picture, right? A dominant business, finances like Fort Knox, and a clear roadmap for growth. So, what's the catch? Come on, in investing, there's always a catch. And in this case, for our fourth section, it's all about one thing: the price. Let's talk about the price of perfection. Let's make this simple. The PE ratio is basically the price tag on a company's profit. A normal one might be around 20. Walmart's is nearly 48. That's really, really high. It's like trying to buy a house in the hottest real estate market ever. You're paying a huge premium because everyone expects the value to just keep going up and up. The problem, of course, is what happens if it doesn't. You've overpaid. And it's not just that steep price tag. There are some actual storm clouds on the horizon. Walmart's own management team has come out and said that new tariffs on goods from China could seriously damage their profits. And all that tech spending we talked about, it has to keep delivering results. Plus, a brand new CEO, no matter how great, always adds a little bit of uncertainty. You just can't ignore these risks. So after all that, where do we stand? On one side, we've got a world-class bulletproof business. On the other, we have a sky-high price tag. It's the classic dilemma for an investor. So in our final section, let's bring it all home and try to land on a final verdict. The final verdict from this analysis is pretty clear. This is a phenomenal company, but that doesn't automatically make it a great stock to buy today. The advice is basically, hey, if you already own it, definitely hold on, but maybe don't go chasing it at this price. There's just no margin for error baked in. If anything goes slightly wrong, the stock could get hit hard. And this really is the bottom line laid out perfectly. The business itself, it's a 10 out of 10. World-class, gushing cash, getting more profitable every day. But the stock, at its current price, the stock might be a 5 out of 10. It's expensive, it has very little room for error, and it's basically priced as if nothing will ever go wrong again. And that's the core conflict you have to wrestle with as an investor. So when all is said and done, the final question isn't, is Walmart a great company? We've already answered that. It absolutely is. The real question, the one you have to ask yourself, is this: how much are you willing to pay for greatness? Because right now, the market is demanding a very, very high price. And that is the trillion-dollar question.